Finance Committee meeting for the Sacramento Metropolitan Fire District. This meeting is hereby called to order. We have the public opportunity to discuss matters of public interest within committee scope, including items on or not on the agenda. Madam Clerk, do we have any speaker cards?
No, we don't.
Moving on to item number 3, Chair will entertain a motion for consent agenda action summary, November 10th, 2011.
Madam Chair, I move that we approve the consent agenda.
And I'll second. All in favor? Aye. Yeah, good work, Director Scheidegger. Alrighty, consent agenda item B, action summary, December 8th, 2011. Chair will entertain a motion.
Oh, I move that we approve said
And I
agenda
second.
item.
Thank you, sir. All in favor?
Aye.
Thank you. All right, now we're on to item number 4, financial reports for November 2011. Ms. McFarland and Mr. Campo, welcome. Like a game I can't play.
Another one.
Does it sit right here?
I'll be trying to follow
Sit
these.
down to move.
Yeah, will the public please bear with us? We are in
Okay,
a
excuse me.
temporary location. Yes,
I think
ma'am.
I'm ready now.
Okay, thank
All
you.
right, sorry about that.
No worries.
It's Rhonda McFarland, Auditor Controller. This is our Finance Committee report for November. And our first piece of information has to do with the amount of revenue and expenditures coming in. And this includes some accrual entries, but it's not full accrual, as we've discussed at other meetings. We do, at this time of year, run in a deficit due to our property tax money. We expect to receive the bulk of the money this month in January, so it will show up in our January financial statements. So I expect that you will see one more month where we will show a deficit on there. And the next slide actually shows the cash balances, and this is a slide that is not in your handout. So basically, it's very similar to the last slide, but it has just our cash amounts in there. So you can see the bulk of the deficit at the county is in the general fund. And then we also have money at Deutsche Bank, which represents some money that we've set aside to retire our pension bonds. And so overall, our cash position is a negative $11 million. Okay, this first summary is our general fund. And I think the first thing that I would like to draw to your attention is, as we are 5 months in the year, that means we are almost at 42% of budget. And so as you look at the numbers, that's kind of the benchmark. But as we know, there are revenues that don't come in evenly during the year, and there are expenses that don't go out evenly during the year. But it's still a nice benchmark to keep in mind. There are detailed reports on a number of these revenue items. We will be going over in detail, as we do at every meeting, our taxes, our charges for services, as well as our medic fees. The other items are just showing here on a summary. Most of them are fairly immaterial, and I have no problems with where we are at this point in the year on any of those items. Going over to the expense side, you should have received a revision to this page in your handouts. And what we did this time, and this is the first time we've presented it this way, we've had this problem with CalPERS where they have not accepted our contributions that we have set aside under our obligations under our MOU. And due to their new MyCalPERS system, we are not the only agency that this has affected, But in prior meetings, I've just told you what the amount is, and if it's in there, here's a percentage. So we went ahead and just added a line item, unpaid CalPERS. And this $8.3 million is the amount that we owe CalPERS at this point through November 30th. And I'll just point out that we did change that number from what you originally received. Inadvertently, the November number was put in there instead of the year-to-date number, and it made it obviously a significant difference. So we are at 42.6% on our labor compared to 41.67% on the amount of year that's gone by. We actually, in looking at that, I feel like we are pretty much at a push on our labor costs because, as you might recall, one of the things that was done when the budget was put together is we did not budget for our final CalPERS payment. We budgeted for the June payment to be made in July. So the fact that we're a little over is made up when you take into account that final payment was scheduled to be in the fiscal year 2013 budget. You can also see we're a little bit ahead of service and supplies. There are some things that we are running over on. We don't, and there's other things that, we pay at the beginning of the year and don't necessarily have evenly during the year. We are right now collecting from our various budget officers information on where they estimate we will end up at the end of the year. We will be bringing to the board a mid-year budget adjustment where we will take into account some of the new revenues that we are receiving. We will, by that point, have the numbers for our property taxes, which will be able to really be the big driver on where our budget goes and if we're able to maintain the services that we presently provide and so forth. So that will be at the second meeting in February is where we're scheduling for that. And so after I receive all that information from the various department and division heads, I'll have a better idea where we sit on that. We also have down below the assessments and contributions to other agencies. The largest number in that is our property tax administration fee. So until they actually deliver the taxes, they don't charge us for that. And then we are, our principal and interest, again, is one of those numbers that doesn't go out evenly during the year. So we're showing that we have pretty much spent everything we budgeted there. And then there's just a small amount of capital assets that you'll see there. And again, that's the kind of thing that you don't necessarily spend evenly during the year. But overall, we're at 42.97%, so just about 43% compared to the 42% of the year that's gone by. So I think we're in manageable shape, that if we do find something when we go through line by line for mid-year, that we're in a position where we can still make adjustments and balance our budget.
Director Scheidegger?
Thank you, Rhonda. Just a quick question on the difference in the handout tonight. First of all, I agree. I think it shows we're in pretty good shape in terms of the time of year. The main difference, though, as you said, between the 4% total isn't the CalPERS, right? I've had a chance to study the difference.
The only number that was changed on here is on the right-hand side where we show the expenditures by object, under Object 1000, the last line that says unpaid CalPERS.
Right.
And now says 8.3 million, which is the cumulative that we do owe CalPERS through November 30th. And in the prior report that was handed out prior to the board meeting, that number was only like somewhere around $2 million. So when I saw that, it was pretty obvious to me that that number wasn't right. So we went ahead and made the correction and had the revised schedule in our presentation and also distributed to you at the meeting here.
Thank you. No, that's it. Thank you.
I have a couple questions.
Sure.
You mentioned, when is CalPERS going to be ready to take our deposit? Crystal ball, I know, but.
Yeah, I asked my staff the very same thing. I asked them, and I asked them frequently, but I asked them again the first part of this week. I said, I know the board's going to ask me this question. And it's very frustrating because I really don't have an answer for you. But I will tell you that, we've discussed it at a senior staff level and basically are going to be requesting something in writing from them to make sure that, it's not just a lower level staff person that knows that we owe this money. it's a very uncomfortable position for us. We're going to be documenting who we talk to, date, time, all of that stuff. And at this point, we don't know.
Okay, thank you, and then that gets to my other part of the question is, okay, we have this, well, actually, two more things. One, is there any interest-bearing account or something that we're getting for this money? And then number two, if this goes on X amount of months, what about the investment potential that's been lost by not being with CalPERS investment? Or is that,
Okay,
how
well,
is that going to get captured?
Well, this is my understanding, and this is a very unusual thing. We actually met with our consultant that was a former executive director at CalPERS, and this, I pointed out to him this was going on, and he was quite surprised because they've done other conversions in the past, and they've always made some provision for people's money not to be held up like this. I will tell you, it's my understanding, based on how CalPERS works, that whatever the credited rate is for the year, we'll get the same that everybody else gets. So they won't say, oh, and by the way, Metro's money was late, so you get less. So whatever the overall rate is, they credit that to everybody's account. So
I'd just like to add in on that. This is of utmost concern that we had senior staff, and we have a consultant that's on board that's worked with us that came from very high up in PERS previously. And your point on the question is exactly what I asked. A, we need to get a decent return on our money, and they said, well, they'll take care of that. But more to that problem is this money isn't in the market working. So, CalPERS has got a lot bigger issues. If we're just one entity with $8 million sitting on the sideline that's not in the pool, President Jones, working in the system, that's a problem. So they're going to be drafting some letters, correspondence going back and forth, and we're on top of it.
Thank you, Chief. Thank you, Madam. Please continue.
And at this point, we are in a deficit on our position with the county, so we're actually being charged interest rather than earning interest on that money. But, just to add on to what the chief mentioned, it just basically means overall, if there's a positive market, the overall rate's going to be less because CalPERS will have had less invested. So, but we will,
Exactly.
we'll be in the same position as everyone else, but the overall position could be better if they had everybody's funds invested. Okay. And I will say that probably for the last, or since January 1st, my staff hasn't been pushing quite as hard because their busiest time of year is right after January 1st because all of the payroll stuff is on a calendar basis, all the changes and so forth. And so I have instructed them next week to really, make that contact again, document the things like we discussed and so forth.
Thank you.
Okay. This schedule basically has our overall revenue for the year, and we are only at 8% because, of course, the bulk of our revenue comes from property taxes, which we anticipate receiving half of it in January. So we actually are ahead of where we were last year at this time by $1.8 million. And as we look at some of the other slides, it'll be pretty clear and consistent with past meetings where that's coming from. Okay, so this is the property tax schedule, and you can see that the money comes in quite irregularly during the first part of the year, and none of that really represents money that's been credited to us for the current fiscal year. It's typically corrections and that kind of things from prior years. In addition, we do participate in the TEETR program with the county, and what that means is they will reimburse us for any delinquencies, and then they pursue the property tax or the homeowners that have not paid or businesses that have not paid their taxes. And they just, at the end of December, gave us those delinquent amounts for fiscal year 2011. And so as part of our budget, because the county tracks all the property taxes in various categories, we do budget for each one of those different categories. And I will tell you that the money that came in December for delinquencies was short of our budget. It was $900,000 short. And we still are pretty much in the dark of where our tax revenues are going to come in. But based on the numbers that we were given, where they estimated for our dry period funding, as well as some supplemental taxes that have come in, if those numbers they used for the estimate are accurate or at least conservative, which, you know, and for their part, I wouldn't think they would want to overestimate it, because then they would be offering us much more financing than maybe they should. So at this point, I'm estimating the worst case, we might be 300,000 short, which means I think we're going to make up at least 600,000 of the amount we were short on the delinquent taxes in our other categories, which include things like secured taxes, which is basically property, real property, unsecured, which is things like when people pay the taxes on their boats and that kind of thing. So, we did our best estimates at the time, and at this point, it looks like we may be short, but nothing in the neighborhood of past years. So the conservative budgeting that was done, I think, is paying off, and we'll know more by the next meeting.
Questions or comments?
No, I think she's answered them. Thank you.
Okay, so this is our medic fees. This is the reason that we're ahead of last year. You can see overall we're at 1.5 million ahead of last year, and we did institute increases in our rates to recover the full costs. And in addition, you can see that the percentage we're at is about 50% of budget, so we are ahead. By the, anyway, you will be hearing more about the medic fees this evening with the agenda item that you have, because even so I said we were recovering full cost, of the ones that we were charging for, and as you're aware, there are others that haven't been charged for in the past. So, is there any questions?
I don't have
good.
any.
Yeah, consistent with our prior meetings.
Yes, ma'am.
Okay, so this is our capital facility fund, and this is the fund where we deposit our development fees, and you can see that we are at 102% of budget. We've seen more activity in the development fees than what we anticipated, and so I'll be working with the people in charge of fire prevention to come up with where an estimate for June 30th that we'll have in our mid-year. But we are seeing more activity than we anticipated, and definitely more than we had in the prior year. And I will also say this is the fund where we have also put in our budget the things like the rental income on Sutter. And we have an agenda item tonight and an item that we'll be talking about in just a minute that kind of addresses that. So maybe I'll wait to go into that. But we are trying to make sure that the things that we have in this fund relate to our obligations to those that pay those fees. Okay.
Thank you.
So here is the detail on the development fees by month. And you can see that we had, this last month was our best, was about $68,000, and our best month was the prior month. And it's consistently been ahead of our budget, and we're about $354,000 ahead of where we were last year at this point.
Is this part of the $600,000 makeup on the 900,000?
No, that's in our A fund.
Okay, so.
That's a general
The 600,000 makeup is just for the A fund. You're not taking it out of any of this?
No.
Okay, thank you.
Let me address that. Is that in regards to the shortage of the taxes?
Unpaid taxes, yes, sir.
Yeah. Everything is being kept separate. That 300,000, that's the best estimate at this point. It's, we really don't know. That's going to be on top of, by the way, we estimated a 4% drop in property taxes when the county told us we should estimate 3.3% drop. Okay, so let me make it clear. The 300,000, if it ends up being that, is on top of a complete 4% collapse. So we will have eaten up that 700,000 differential that we put in as a buffer, and that 300 grand would be on top of that. But we are deriving fees in medic fees and stuff that are coming in. You'll be taking hopefully some action tonight, and we think that we're going to be able to end the year in pretty good shape.
Thank you, Chief.
Okay, our last fund that we're reporting on this evening is our grant fund. And as we've discussed in prior meetings, the largest amount of the grants that we receive is for the simulator, which the work is in progress. We have not requested any of the funds. We're not at that point right now. And then our SAFER grant. So we feel like things are right where they should be on that. And even though I am trying to report more on a summary basis in the other funds, I went ahead and left the detail for this fund because I think it's important for you to see the number of funds that Mr. Davis and his staff have been working on. I think it speaks well of their work that we have $7 million coming through the grant awards. These numbers, the way that was budgeted based on the total amount of the awards. And when we do mid-year, we are planning to make some adjustments downward. For example, the SAFER grant is a 2-year grant, so we're going to just cut that in half so that our numbers that we show in the budget are closer to what we expect rather than the total amount of the awards. So we will, if we, meet all the guidelines of the various grants, we will receive this money, but not necessarily in the current fiscal year.
So these line items that you have denoted here in red would be broken out over 2 years?
The one that I'm speaking of is the SAFER grant. So that is the 2.7 million. I think I'm on the right line. The $2.7 million. That's the one where we have the entire grant in there, where it's a 2-year grant. So the amounts that we expect to receive, we're going to reduce that when we do mid-year so that we just leave the amounts in there that we expect to receive in the current fiscal year.
Jack, what line is that on, please? Or do you know, Ms. McFarland?
It is
Yeah, I don't see it either.
953100. Oh, they're all
It's all under
they're all
aid
numbered
from-
that though, aren't they?
Yeah,
Yeah.
aid from local government.
So it's 1, 2, 3,
Is
4.
it the 2
down.
million?
2.7?
2.7? Is that
Yes.
the one?
That is the one.
All right.
0.7354, et cetera? Okay.
And so, back to your original question then, is the 2.7 100% or half?
All right.
Is that correct?
That's the question. Geez.
Okay. I stand corrected. They have already halved it.
Okay, so
So-
the 2.7 would be for
Is-
1 year?
Is for 1 year.
Okay.
So I stand corrected.
Okay,
Well, it says year one of 2 years here in the written part to the left of that number.
Okay.
Year one of 2 years, so
Okay.
that's pretty clear. I mean, it's definitely the small print though, so thank you for pointing that
Yeah,
out.
and I guess I misunderstood, but together we got where we needed to be.
Thank you for pointing that out, and thank you for that
Okay.
question, Jack.
We just have all the detail. You can see it's, with the SAFER grant, that's where all the labor costs are coming from. So that it is separated out from the A fund, the individuals that are working under that grant. And I guess I really don't have anything else to mention on that unless there's any more questions.
Further, Director?
Okay.
Thank you very much. And
You're
you
welcome.
might as well, I'm not sure how you and Mr. Davis have divvied it up, but number 5 has your name as well as Mr. Davis. We're moving to the resolution creating leased property fund
Okay.
212L, as in lease.
All right. Well, he signaled me since I was up here. I'll just continue on and.
Way to delegate.
Yeah, I was trying to just go away, but I wasn't successful.
But we also have our written
Okay.
things here in front of us, so we can follow.
On what we're doing with this fund, typically, where the different positions that I've held, I've never taken opening a new fund to a board, but we are under the rules of the county, and they do require that. And so we're bringing it to you, and we are trying to do a better accounting of all the surplus property that we're renting. And so
Okay.
everything
Yeah.
that will be going into that fund will be things like our lease to Sutter for the first floor of the Armstrong Building. And as we're able to lease up the Hurley Building and the Gold Canal Building, we will have all the revenues going in there and all of the expenses going out. And when, at the point that they're all leased up, we anticipate actually having an excess that we can then dedicate to capital replacement. And by having it there, I think it makes it clearer that if those buildings were to go away at some time, if you were to choose to dispose of those buildings when the market recovers, it would be very clear what the costs associated with that would go away and the revenue that would go away.
We'd be able to make, yeah, thank you. Well, I see no, I would totally recommend this to the full board. No, it's just a
Yeah,
presentation.
in fact,
a
it's on
consensus
the,
to-
it is on the consent calendar, but if someone was to pull in and ask about it, I thought it would be good for us to, talk about it here so you would understand what we were trying to do with that.
Well, for me, it's fairly straightforward. Now that I step in it, I don't want to
Good idea.
but it, yeah, another fund, and keep track of that. And
Yeah,
for
and
that
it's-
future decision that you referred to.
Yeah, in addition, because right now it's in what we call our capital facilities fund, that's the fund that has our developer fees on it. And there are very strict rules about, that fund. And so
Where?
by having things, more than one type of expense in there, it makes that we would have to do analysis work all the time. So it actually, I don't like to have any more funds than we need, but in this case, it actually will be more efficient for us.
I totally understand that. All right, well, you have full support of the Finance Committee for moving that on the consent.
And
If
then-
anyone has questions, well, you or I can address it, yeah. So number 6, creating simulator grant fund 212S. Same
Mr.
situation.
Simulator is not going to come up here, but I will talk to that as well.
Oh, he's on his way.
All right, the simulator is Mr. Davis's project, and so I think it would be best if he spoke to it.
Well, Ms. McFarland, you're doing a fine job, and we'll just make Larry work a little more here.
Thank you. Larry Davis, Chief Development Officer. Yeah, the
Welcome,
purpose of
Mr.
the two
Davis.
funds, the lease and the grant, is to make it easy for you to see those in the budget and keep track so there isn't confusion. Both of the lease properties, as we get more leases, we'll be able to compare that with our debt service easily and figure out where we are cash flow wise. And the simulator, same thing. That's $4 million of money that's coming through us. And it's keeping it in that fund keeps it out of the other budget and a little easier to keep track of.
Exactly.
And meet your federal reporting requirements too.
Yes.
By doing that.
Well, and the
Yeah.
other is that it needs to be an interest-bearing account. So the simulator grant, as it comes in, we're going to be drawing advances on the funds in order to meet the payments schedule. And federal requirements require that money be kept in an interest-bearing account, and any interest in excess of $100 has to be returned to the Treasury. So just makes it easy to,
Separate account.
right, just one number to look at, rather than trying to deduce the prorated share out of a column.
Well, I think we have a full consensus for the new district fund, 212S for simulator. Anything else? Thank you, Mr.
Thank you.
Davis. All right. Next item, we have legal bills for September 2011. Chair will entertain a motion for said
So
ratification.
moved.
And second. All in favor? Aye.
Aye.
All right. Let's see, we have agenda items for the next meeting. Anything to add from staff or my fellow director? All righty. Thank you very much. Our next meeting date is scheduled for February 9th, 2012 at 5 p.m. And this committee hearing is hereby adjourned.